Hey traders, Raghee here, and in this recap video we're going to cover copper because copper is sitting in a range that I am really for the second time within the confines of this uptrend. This thing has got my attention. Right here was the last time, and here we are testing the wave again. Now when we get down to the 34 EMA wave, what this is the 34 EMA on the high, the low, the close, and the low. So the 34 EMA on the high, the close, and the low. That's why there are three lines here. So when we get down to this area here within the wave, that is a conservative correction to support, and that's where I want to think about buying. And so we've pulled back. Now here's what's an interesting thing about pullbacks, and that is typically the chatter, the news about a market when it's pulling back is seldom going to be positive. You know, you're going to hear about all the bad fundamentals about copper. You're going to hear about all the reasons this market should be heading lower. But by the time you've heard the chatter, it's already been discounted, right? By the time mainstream media has glommed on to whatever the negative fundamental story is for copper, or really for any commodity, normally, unless it's breaking news, this is already going to be discounted. Discounted means it's being factored in. I'd like to see a little bit more weakness in copper, getting us down to levels closer to the 34 EMA on the close, which is the yellow line here with the green dots on top of it. I'd like it to get a little closer to that, or even this Darvis level around 87.50. That would be ideal. But I want to be a buyer here. Now there's a couple ways you can buy this. One, as the market is heading lower, you can actually look at a buy, actually getting long copper in this zone. The closer we are to the bottom line of the wave here, the less risk we actually have because we're right up against the stop loss. The further away I am from this, the greater risk I have because I'm so far away from the stop loss. But as we sell off, another alternative is to look at options in here. Now I will typically say look at the options, say in the top half or the top third of the range, where the distance between the entry and the stop is greater, because options will give you a little bit more leniency, a little bit more wiggle room between that entry and basically losing money as the market sinks into the deeper part of the zone. You can actually turn this into use this asset class that's going to allow you to tolerate that typical and expected price fluctuation a whole lot easier than perhaps being in the underlying contract. So oftentimes at the first layer, I'll say consider an option. Second layer, you can start thinking about the underlying contract or even buy more options. But the trick is on the options purchase, which would be looking at calls, make sure you're buying that with bearish momentum. So I am bullish on copper. I want to take advantage of the weakness into the 34 EMA wave, which are those three moving averages we talked about before, and I'm looking for a resumption of the uptrend. I'll see you in the next update.